Symbotic warehouse automation winner or a busted growth story? Symbotic stock is down 25% on the back of their Q3 results, which they just reported. I think this was a major overreaction as the earnings were fine. The company grew revenue 57% year over year, continues to march toward profitability, and it seems like the drop has mainly stemmed from their weak guidance for the upcoming Q4. So they're projecting $455 to $475 million of revenue for Q4, which is down from Q3, the current quarter, where they had revenue of 492 million. But if we just look year over year, Q4, their projection would be a significant jump. 455 to 475 would be up from 392 million of Q4 of last year. So I think it often paints a better picture to compare year over year or the full year than these sequential quarters, because obviously there's a lot going on. It's a little lumpy, can get cyclical, especially with this company Symbotic with these long rollout periods, and we'll get into some of the issues they had this quarter. But I was considering selling my Symbotic position for a few months now. A lot of people have been asking me in the comments, but I've hung on to it. This is definitely one of my smaller, more speculative plays, and I've expressed a few of my concerns. There's really just two or three, over many videos that I've made here. The main one has been just this intense insider selling we keep seeing. They all keep dumping shares. So if the highest ranking people of the company don't seem to want to own the stock, they continue to sell. I haven't seen a single buy. Why should I want to own it? So that's definitely been concerning, but they can sell for a number of reasons. And I've kept my shares. I've given the benefit of the doubt because there seems to be nothing wrong with the company. They seem to be on a great track for the long term. They're growing at a fast rate. I think warehouse automation is a huge trend to ride as a lot of companies are looking to save money. They're looking to stay competitive with Amazon. So my only other concern outside of the insider selling, really, the big one would just be competition, as there does seem to be a lot of warehouse automation companies out there. However, I think the market is big enough that many players can thrive. And the CEO, Rick Cohen, he keeps saying things about how Symbotic is so far ahead. He's got quotes like this one was from their recent investor day. He stated, "We're so much lower cost at moving boxes than any other person-based or automation-based system anywhere in the world." So he keeps making these bold claims. He seems pretty confident, and he's got a great track record. So, in my last Symbotic video, I talked about their investor day presentation, which espoused the long-term opportunity. You could definitely check that out. But for this current Q3 quarter results here, we had already known going into this, again, back in the investor day, Cohen stated that 2024 was going to be the company's slowest sales year and that growth would pick back up in 2025. They basically reaffirmed that on the call. There's a quote here from Carol Hibbard, who said, "We believe our first quarter of fiscal 2025 should reflect reaccelerating year-over-year revenue growth." So Q4 guide was disappointing, and that made the stock tank 25%. It's just not really, I didn't think it was a big deal. Again, especially since they had kind of guided for this. It wasn't even a surprise to people paying attention. So it seemed like the only negative aside from the weak guidance was that their system gross margin fell. And it sounded like this was really just due to construction schedules taking longer than anticipated. Symbotic had outsourced a lot of the construction to these third parties in an effort to keep up with the demand, but they stated on the call that they're actually starting to bring it back in-house. So I think short term, this will continue to drag on the margins and hence the Q4 weak guide. But I think long-term vertical integration always seems to be better and win out. And I'm sure they'll get it to a point where by doing it in-house, they actually can get the margins, decent or significant increase there. So the company's up to 21 fully operational systems from 10 in the same quarter of last year. So they've doubled the amount of fully operational warehouse automation systems they have. And as more of these systems come online, I think Symbotic's cash cow and high margin business will take off. That's what really got me interested in this company was the software and maintenance subscription model that comes once their warehouse automation systems are fully operational. So today, most of their revenue is coming from the construction of systems, but that doesn't bring very good profit margins. It's really like an industrial, type service. And the hope is over the long term, this recurring revenue from completed systems will surpass, definitely will start to make up a more significant chunk of the revenue versus the system build out revenue. And then I think this company becomes a money printing machine. So they have 21 fully operational systems, like I said, so a double from last year. So we should start to see that higher margin software revenue, start to creep up. And then they have 39 deployments in progress. So without even factoring in any new customer, apologies for the dog barking in the background. If you could hear it, it wouldn't be a real day in the life in paradise here if the dogs didn't bark in the middle of me trying to film a video. They're just terrorizing the poor mailman. But anyway, where was I? So, we're looking at a tripling of the systems probably pretty soon, within the next couple of years, I would think at most it would take to get these systems deployed. They'll keep trickling in a few each quarter. They completed this quarter. They had started 5 new deployments. They've got the 39 in progress, and they completed 3. So again, that slowed down again with the construction delays, but you can kind of see each quarter it has been creeping up. Again, Q3 of last year, they only completed 1 in the quarter. Q4 23, they completed 2. Q1, they completed 3. So, we're trending in the right direction here. And I think that should be a boon to the margins. So I've been investing in and researching Symbotic since May of 2022. I've also sold a lot of options on my position and selling cash secured puts, from which I've made $6,651.43. And you can just see the most recent trades I put up on the screen here. I couldn't fit them all in one screenshot, but just kind of gives you an idea of the most recent ones. So these start back in April of 2024, but my first ones stretch all the way back to January of 2023. So in just over a year, I've made over $6,600. And one way to look at this is what I've been able to monetize my position here and earn money, whether the stock price goes up or down. It has been very volatile. Another way to look at it as some of my shares, I purchased 200 shares at $50, which cost me $10,000. And I would be far underwater on those shares. But because of all these puts and covered calls I've been selling, I've really been able to reduce my true cost basis by that 6,651. So my real cost basis is now somewhere around $3,349, which would equate to about $16.74 a share. So until Symbotic drops below, $16.74, and if I were to sell my shares at that point, that would be when I'm actually losing money. I haven't actually lost money here, which definitely has helped psychologically. I think just watching this thing tank. And I think the best way for me to describe my options trading style is this quote from Proverbs that says, "Wealth gained hastily will dwindle, but whoever gathers little by little will increase it." And, this really stuck with me. I keep going back to it because this is what I've been doing now. And these slow and steady, consistent wins do add up. Whereas in the past, you too deep in volatile stuff and your whole portfolio crashes. I've definitely experienced that. But, it seems to be working. I don't try and gamble and, hit home runs buying like short-term call options and stuff. I'm simply, selling against my position, and I'm earning consistent income and assuming very little risk in the process, really. So it's been a great way for me to earn income and also hedge this position basically simultaneously. It gives me peace of mind that, I've not actually lost money on the shares I paid $50 for. I won't be losing money, like I said, until the stock were to drop below 1674, and I would have to sell my shares. So, I'm sticking with this one. I do still see potential, but I just continue to monitor it quarterly. Like I said, definitely more on the speculative side here. But yeah, if you guys found value in this, let me know your thoughts on Symbotic down in the comments below. Make sure to subscribe. And I discuss and share all the stocks I'm buying and selling, as well as these sorts of option strategies with our community members through our Discord server. We're doing weekly private Zoom calls. So if you're interested in that, you can check out the link to my Substack. It should be in the description below. And you can read all my articles for free, or you can consider becoming a paid member to get access to our community. Let me know your thoughts. This is Vinny from the Investment Club. I will see you guys next time.